Good morning, traders. It's Friday, September 19th before the bell. We're heading into the last session of the week with the market still digesting the Fed's first rate cut of the year. Yields are shifting, gold is holding firm, and tech continues to fight for leadership. Today, I've got two clean trade setups to anchor the open, one momentum name in semis and one defensive play in healthcare. So let's get straight into it and talk about the news first. So overnight and futures pulse, the S&P futures modestly higher. So closing on Thursday, the S&P 500 rose 0.5%. The Dow also up 0.3%, and Nasdaq up almost 1%. The Russell up substantially at 2.5%. Then the dollar slightly weaker, tailwind for multinationals and commodities. Gold steady near highs, proving institutions still want to hedge, and oil chopping sideways with a downside bias, weighed by demand concerns. So for the week, the S&P up 0.7%, the Dow also up 0.7%, Nasdaq up 1.5%, and the Russell up almost 3% for the week. Now let's talk a little bit about our macro tone. So the Fed cut aftermath, we're seeing the quarter point cut was billed as risk management, but inflation break-evens are ticking up. Stimulus versus sticky prices will keep the tape choppy. Rates, short end eased, but the 10-year remains sticky. As long as it drifts lower, growth trades have air. A spike will punish semis and software. Talking about commodities, and oil staying weak is positive for inflation optics, but a headwind for energy stocks. Gold steady means hedging flows are real. Investors want exposure both ways. Sentiment, managers are still overweight equities. Cash levels low. Great for momentum until we got a bad surprise. Alright, a little bit on sector rotation then. AI, cloud and STEMIs are still the center of gravity. Nvidia, Broadcom and peers defended support this week. Buyers are active on dips. Then healthcare and defensives, quiet leadership. Names like JNJ, UNH keep attracting steady flows. Consumer, retail sales data showed resilience, but it's split. Premium brands hold, budget retailers lag. Then financials. Banks remain fragile, margins pressured by lower yields, and energy still scalp only. Weak crude caps upside. So our takeaway today, traders, this is a market rewarding discipline and confirmation, not blind chasing. Okay, traders, taking a look now at Trading View, we're going to have a look at our trade setups. So the first one we're taking a look at is JNJ, ticker symbol Johnson & Johnson, and this is our healthcare anchor. So while it loads why it matters, well, J&J is a large cap healthcare leader with pricing power and balance sheet strength. In this macro tape, sticky inflation and Fed uncertainty, defensive names like J&J provide stability. Alright traders, so our long trigger for J&J will be break and hold of ORH, while XLV is green with breadth across pharma and biotech. An alternative entry, if market dips at the open, look for the first higher low reclaim of VWAP as a buy signal. Risk management, lose VWAP and sector rolls, cut quickly, and targets will be prior day high, opening range extension managed by scaling out into strength. Okay, our second trade setup for today is Nvidia, ticker symbol NVDA, and this is our AI chip momentum. So why it matters, well, Nvidia is still the heartbeat, never going to change anytime soon. So after consolidating near record territory, it looks primed for either a breakout or a clean fade. So a long trigger for Nvidia will be pre-market high break and hold with strong volume and semis confirming. A fade setup will be if Nvidia spikes early but can't hold VWAP within the first 15 to 20 minutes. In that case, faded back toward yesterday's midpoint. Risk management, hard stop below opening range low, respect it. Nvidia reverses hard when flows flip. Targets, ORH measured move to prior swing high to trail runners under intraday higher lows. So those are our 2 trade setups today, traders. Now the tape tells to watch. So futures versus VWAP, the first pullback test is key. Hold equals added confidence, break equals cut risk. Breadth at 10, so strong A to D ratio equals trend potential, split equals rotational chop, and liquidity magnets ORH or ORL from the open, yesterday's high-low pre-market levels. So traders, today let's wrap it up. Here's the playbook. Macro, the Fed cut aftermath, yields are sticky, dollar is softer, and gold is firm, still trading near its all-time highs. Let me open it up there. Rotation, tech still fighting, healthcare quietly leading, energy is fragile. Setups, Nvidia if AI momentum continues, JNJ for defensive stability. So here we're taking a look at gold. As you can see, still trading near all-time highs. So that's the year to date over there. People are continuing to hedge. So stay disciplined, let VWAP and volume confirm, and book clean wins. Protect the weekend, don't force trades into the close. I'll see you at the bell. Thanks for taking the time to join the video again today. I hope you found it helpful. And I'll see you again for a weekend wrap up. Take care now.